Hey everyone, me Kevin here. Is Apple stock a buy with its 5th stock split in history just announced and coming up on August 28th? And what does this have to do with the Dow Jones Industrial Index? Am I adding to my portfolio, and how much do I even have in Apple? Well, in this video, I'm going to break down all of this, including the company's financials. We'll talk about the stock split, we'll talk about whether or not I'm buying, and my new price targets. But first, this video is sponsored by my amazing YouTube course. Check out the YouTube course linked down below. It launches on August 10th, and I cannot wait to share it with you. Let's get started. First, let's talk about the stock split. Apple announced yesterday a 4-to-1 stock split that will occur on August 28th. This means for every one share of Apple you have that might be worth about $400, you will now receive 4 stocks worth about $100 each. In other words, you take the one stock you have and multiply it by 4, and you take the price and divide it by 4. So in reality, you're not really changing the amount of money you have, but it makes you feel like you own more Apple shares, and it also makes the company feel like it's less expensive. But what does this actually mean, and why would Apple do a stock split? Well, let me give you some of the reasons some people think that Apple is doing a stock split, and then let me give you my opinion on why I think Apple is splitting their stock. Many say that Apple is splitting to be more accessible to investors with less money, which means, hey, if you only have $100 to invest, you can't buy an Apple stock, right? Because, well, Apple stock's $400, you only have $100. But wait a minute. The reality is today people can buy what are known as fractional shares using companies like M1 Finance, Robinhood, or Charles Schwab, or other brokerages. With the advent of fractional shares, no stock is really untouchable. In fact, most of the stocks I buy today, I just buy with a dollar amount. So I might say, I'd like to buy $1,000 of Apple stock. I don't even pay attention to whether I'm getting 2 shares or 2.5 shares or whatever. I just want my $5,000 at play. I don't care if it's 20 shares. It doesn't matter to me. On Apple, though, it is possible that Apple, some say, is doing a stock split because they are the largest stock in the Dow Jones Industrial Average. In fact, Apple currently trades for about $412 per share and puts Apple at the top of the 30 companies in the Dow. This gives Apple, since the Dow Jones Industrial Average is weighted based on the price of a company's stock, this puts Apple at about a 10% weight in the Dow Jones Industrial Average, which means anytime somebody buys a Dow index fund, like the SPDR DIA index fund that tracks the Dow Jones Industrial, you're literally getting 10% Apple. You put $1,000 in, you just got $100 into Apple by buying a Dow Jones Industrial index fund, which seems a little overweight for something that's supposed to be broadly diversified, although the Dow only has 30 stocks. But even at the S&P, which is a market cap weighted index fund, Apple has about a 5.8% weight in the S&P 500, despite there being 500 companies in it. So others say Apple reducing their price and maybe being more of a middleweight in the Dow isn't going to make a big difference. Some people say, the Dow's going to look more diversified away from tech, and more people will actually be able to buy the Dow, which will increase Apple's stock price. I don't know. It all sounds like a bunch of speculation to me. So what the heck is really going on, and what are my thoughts, and am I going to buy this stock? Well, let's talk about that right now. All right, so the reality is Apple might be splitting their stock for a variety of reasons. My personal belief is that Apple is a company with a history of being approachable to its customers. Apple wants to be in everyone's household and perhaps wants to be in everyone's stock portfolio without being overbearing, especially with the rise of these stay-at-home traders. This aligns with Apple's branding more than anything. I personally don't believe that there's any real motivation here to pump the stock value, other than simply aligning with Apple's brand psychology. When people hear that a company is a $5 stock versus Tesla is a $1,500 stock, they automatically think that Tesla is better. But that may not be true, even though it gives that impression. It's just sort of a psychological instinct. Oh, that's an expensive stock. Apple is not known for trying to be unapproachable. Even though their iPhones and their iPads aren't the cheapest things in the world, they're trying to keep the impression of being exclusive down, and they're trying to make Apple accessible to the masses. This is why they continuously try to reduce the cost of some of their entry-level iPhones while still giving amazing quality and customer service. To me, this is just marketing at its finest. And anytime a company does a stock split, they seem to get massive PR attention. So Apple has done 5 stock splits. The last one wasn't since 2014 when they did a 7-1 split. Well, yesterday they announced a 4-1 split, which will take effect on August 28th in about 4 weeks. Well, now, should you buy Apple? Here's my analysis. First, Apple is a great company to invest in, and it doesn't have a high bankruptcy risk. In fact, Apple is probably one of the safest tech companies to invest in. There's very little that's speculative about Apple, in my opinion. It's not like a restaurant company where you're hoping it's going to double or triple or 4x when the vaccine comes out. And it's not like some hot IPO that's gonna half in value next month and then quadruple in value the month after that. You're not experiencing that insane volatility with Apple. However, this safety aspect also provides, on one hand, comfort for newer investors and not necessarily those looking to gamble, but it might also keep the lid on future growth for Apple's stock price. For some quick numbers, if Apple's earnings continue to grow at the rate they grew this quarter during a pandemic with stores closed and with supply chain issues, then Apple might be able to knock on the door of $30 billion in operating profit by the end of 2022. If this happens, adjusting for taxes and extrapolating this quarter's growth, Apple could be a $480 to $500 stock by the middle to end of 2020. This means if you buy the stock at $400 per share, you'd make around an 8 to 10% return on your investment. However, some argue that no, Apple just doesn't have that massive growth potential, and it's being overbought because of the hype around the stock split and their last earnings growth report. Apple smashed records with Mac sales up an impressive 21.6%. iPad sales 31%, which is what I'm using right now to annotate this on. Wearables up 16% and services up 14.8%. Apple, by the way, makes massive profits on their services. In fact, when you look at Apple's margin, you'll see that their expenses for the products they produce, they're operating at about a 70% margin on actual products. That means if Apple sells $1,000 worth of iPads, they have to spend about $700 to actually produce the iPad. Whereas look at this segment that's seeing massive growth of about 14.8% here. This is the services sector. The services sector only costs Apple about 32%, which is much more juicy for growth investors. And if we extrapolate the growth we saw this quarter, it is not unreasonable to expect that its current valuation of about 40 times earnings, Apple should be worth somewhere between $480 to $500 sometime in 2022. It could happen before that, it could happen after that. Nobody knows, and there's no guarantees. And this is obviously predicated on Apple continuing to grow at the pace that it is. And that might not happen. If the stay-at-home play ends and people go back to work and they go, they stop buying iPads and they stop buying Macs, or maybe everybody already bought their Macs and iPads and they don't want them anymore, well, that's not going to be good for Apple in the future. With regards to my portfolio in Apple, this is it. I've got about $396K in Apple. I'm up about 43.5% on Apple. Most of this is in my hand-picked stocks, which you could see by going to metkevin.com/top. But I also have Apple shares in the Metkevin 1337 index, which is just really my top 40 to 45 stocks, and I make adjustments to that. We're currently on version 3, so go to metkevin.com/1337V3 to see that pie. Apple is in both of those with larger weights. Okay, so what do we think? Is Apple a buy right now, and am I buying? Well, I've shown you what I've got in Apple. At $412, I'm a hold on Apple. I'm not gonna buy, and I'm not going to sell. I think the stock hype is what it is. It's hype. The stock split is a bunch of hype, and I don't think it's actually going to make any differences. It's certainly not going to make any fundamental differences, as all it's gonna do is divide everything by 4. It makes no difference at all. If Apple continues to grow at this rate, it'll be a nice, safe, balanced investment to have in my portfolio. If growth falters, we'll see better buying opportunities for Apple. In my opinion, I'd like to buy Apple under $400 per share, ideally under $380 per share. That would make me feel more comfortable buying Apple. In the meantime, I'd rather take advantage of discounts on companies like Tesla and Lemonade, who have had substantially red days this week, and I'd rather take advantage of some of those opportunities, which in my opinion, those are gonna see way more volatility than Apple, but knowing that I'm going to hold these companies for 5 to 10 years, I'm not worried about those at all. There you have it, folks. Thank you so much for watching. Make sure to join the YouTube course. It is linked down below. Use that coupon code. The price does go up today. Thank you so much for watching, folks, and we'll see you next time.